Kendall Trotter. Thanks for tuning in to this edition of the Las Vegas Real Estate Update. This edition is sort of a continuation upon a recent update that I did with my friend and partner Steve Hawks from RE/MAX Platinum about FHA loans. We talked about FHA loans a lot from a realtor's point of view. Today I would like to hit a little bit more on the buyer's point of view. And I brought my good friend and FHA expert Kim Marks from Hillside Mortgage to join me today. Thanks for stopping in, Kim.
Thanks, Kendall.
Let's for viewers who don't know, I know a lot of people think that an FHA loan is only for a first-time homeowner, and that is incorrect.
That's incorrect.
So, almost anybody can qualify for an FHA loan. Of course, if they have a job and their credit's got to be a certain amount. However, it wouldn't have to be on par. I guess what I'm getting at, the FHA loan requirements are a little bit less than, say, a normal Fannie Mae conventional?
Conventionals are a little more strict, definitely, and FHA's a little more lenient on the credit. It goes back to make sense underwriting. If you have no credit scores with FHA and you have other bills like cell phone bills, utility bills, you can actually use those as a credit with an FHA loan, whereas a conventional loan you could not do that.
Right.
So it also, on qualifying, as long as you have a 2-year job history in the same line of work.
Doesn't have to be the same job, just the same
line.
Yeah.
Yep.
Same job type. If you were a waitress at this casino and you went to this casino, they'll still take that, right?
Correct.
Yeah. Down payments, FHAs are 3% down as opposed to a minimum of 5% down, correct?
Correct. On a conventional loan, you're looking at 5%. On an FHA, you're looking at 3%. That 3% can come from, there's 2 assistant programs out there that the seller contributes the 3% to that program, and then that program in return gives it to the borrower for the down payment. And you can also get a gift from a relative for the 3% down. For
all of our viewers that are sellers that just had a heart attack at that last statement, let's explain that a little bit. Since FHAs, the 3% down payment can be a gift, it's fairly common for a seller to make a tax-deductible charitable donation to a charity, which will then gift the 3% to the borrower. In essence, letting the borrower purchase that home for little or no money down. Now, keep in mind, home sellers, this can be a win-win situation for everyone. 1, home sellers get to sell their home. 2, home buyers and borrowers get to own a home. And at the end of the year, Uncle Sam will give the seller a nice tax break because that is 100% tax deductible, am I right?
Mm-hmm.
Yes. So we are currently starting to see a lot of FHAs. For a long time, HUD was behind the ball on FHA loans, and that's partly what contributed to the big subprime thing that's going on right now, because for many, many, many years in Clark County, they were so far behind our median price that borrowers that would normally qualify for an FHA loan couldn't buy a house FHA because the loan limits were too low.
Correct.
I think when I started in this business, the average price of a home was about $180,000, and FHA would only insure up to $135,000. That's a big difference there. But now, let's talk about the new loan limits as of recently.
Just recently, the loan limit went up to $400,000, which puts a lot of houses in that FHA range. And it helps with a lot of, I'm doing a lot of young kids right now that have jobs, and they, 23, 24, they have good job stability, good credit, and they're able to buy a 3-bedroom home, which they couldn't have bought 2 years ago in Vegas.
$400,000, folks. If you're not local and you're watching this somewhere else, $400,000 will buy you a lot of home in Southern Nevada right now. Really, really nice home. So we were very pleased in our business to see HUD step up to the plate and raise those loan limits. And it's really working. I know that I've been getting a lot of calls and inquiries, and people are going FHA. Let's explain the difference between an FHA and conventional loan. Interest rates. What's the difference in the interest rates?
Interest rates are the same. If you go up in value, say 95% on a conventional loan, your rate is going to be higher than it would on an FHA loan because FHA is down there at that 80% level.
Right.
You can also, another thing with FHA versus conventional, if you have a first and second conventional loan right now, and with the market declining the way it is, if that second's willing to subordinate, you can refinance that first at 95% on an FHA loan. You don't have to have an FHA loan to do that, but you can refinance that first to an FHA loan to 95%.
And wipe out your second.
No, the second would have to subordinate, and then you may be at 125% loan to value, but it puts the second in a better position because now they have a fixed rate,
right,
and it's a good loan, and they'll be able to make the payments.
And let's talk about that fixed rate. An FHA mortgage is a 30-year fixed rate mortgage.
You can get adjustables, but they're not attractive. Why, when the rates are the same?
Normally, they're 30-year. They're not what we people have been hearing about on CNN. That's, you know, making the stock market do this every day. It's a good loan. It was invented to help ownership in America, help people buy homes, and it's starting to work again because with the different requirements that Fannie Mae is making everybody conform to, it's hard for an average Joe still to go out there and get a loan. FHA is his way. I personally have got 2 this week, FHA borrowers. And,
yeah, that's all I'm doing right now is FHA. FHA also has, if you have an FHA loan right now, you can refinance that FHA loan with just an appraisal and a mortgage credit check. You don't have to qualify again as long as you're lowering your rate. It's a streamlined refinance, and it's really easy to do. So if you're at 7%, you can get to 6, around 6.5 or down right now.
That's awesome. Kim, give our viewers your contact information if they're interested in an FHA loan.
Okay, you can give me a call at 702-273-1423, or you can email me at marksteam@live.com, and that's MARKS team.
Thanks for tuning in to this edition of the Las Vegas Real Estate Update. We hope that this answered a few of your questions about FHA mortgages. Obviously, if you have further questions, feel free to give me a call, 702-525-2025, or Kim directly. Have a great day. Thanks for stopping in.